Hello everyone, this is Jimmy Singh, broker owner with Supermax Realty. Welcome to my YouTube channel, Real Estate Edge with Jimmy Singh. In today's short video, I like to answer some of the common questions asked by my sellers, buyer customers, or my audience to the channel. So what is the expectation how our market will be affected by upcoming rate cuts? What should we expect in the summer months or moving later part of 2024? Folks, everybody has different, theories, ideas. So I jot down certain points which I like to share, and you can write your comments on my channel and say what you feel where we are heading. So as we all know, in last Bank of Canada announcement, they said we are heading to the easing cycle and rate cuts are on the way. Whether they do the first quarter point rate cut on June the 5th, which is coming Wednesday, or they do in July, it will have some impact on our market for sure. Another thing is it's very hard to predict. As we all know, lot of top economists for different banks, they were predicting last December in 2023 that the rate cuts are coming in January. Nothing happened. Then they said rate cuts are coming in March, April, again nothing happened. So if you watch my previous videos on the channel, I told most of my customers that I don't see any rate cuts early in spring session, but summer with the slow GDP growth numbers recently, we are very close. But the question is not about when, the question is how much and how quickly, and they bring these rates down to have meaningful impact on people's life. So first I would like to discuss about mortgage holders. If rate cut happen, example 0.25 basis point, which is what everybody expects, and if you are carrying a $500,000 in mortgage, it will be $72 per month in your savings. If you are carrying $1 million mortgage, the saving would be $144. And people who have variable mortgages, this point of time, variable is way higher than fixed mortgages. Variable rates are sitting anywhere from 6.2 to 6.4. And if somebody wants to take a gamble on where the rates are heading, just be aware to qualify for variable mortgages, you have to go 2 basis point above 6.2, meaning 8.2% is the stress test which you have to qualify. So a lot of people these days are choosing fixed rates which are hovering around 5.3, 5.5 in that range. And always remember guys, people who are listening to media about rate cuts, if you intend to take a fixed mortgage, they are not impacted by Bank of Canada's announcement, because fixed rates, as I told in many of my older videos, are impacted by bond market. Coming to investors, in a lot of my videos in pandemic and over the years, I mentioned in Canada, anytime you buy and sell real estate, there's lot of transaction cost involved. If you're an investor, you're buying brand new pre-construction, you pay HST when you buy a property. If you flip the property within 1 year, again, you have to pay HST, capital gains, land transfer tax, commission, development charges, lawyer fee. So if you're a savvy investor and hold the property for a long time, this is my own personal philosophy over the years. Yes, I have bought and sold properties to consolidate or buy bigger properties, but always bear in mind the transaction cost. If you can hold a property and ride the wave for next few years, you should do so, because transaction cost can be substantial. Another thing I like to mention in regards to the current buyers in the market, especially you are upsizing from a condo or a townhouse, always remember both sides of transaction. For example, if you are starting your search to upsize to a bigger property and you are living in a townhouse or a condo, maybe with the rate cuts in next 6 months in 2024, your townhouse or condo might go 10, 15, 20,000 up. But if you're looking to buy a bigger detached, which is very desirable, with first time buyers, that property will grow more. Meaning your townhouses might be 20, 30,000 up in 6 months, but detached can easily go 50, 60, 70,000. So always remember when you're upsizing both sides of equation. And recent report from Toronto Real Estate Board, Kitchener-Waterloo, Hamilton, Windsor, they're all pointing to inventory growing month over month, and in certain markets now the supply of housing is all-time high, decade high. For the last 10 years, this is the highest supply on the market, and lot of investors who are in negative cash flow and who are already waiting for rate cuts for long, they might throw towel and just take their losses and move on. So that is something you have to consider if you're an investor. If you can't hold the property for next 12, 18 months, where I expect meaningful rate cuts, it might be challenging for you to carry over those properties. Second kind of people, which call me these days are people who have trapped equity. These are those people who have bought properties on the peak of the market 2021, 2022, and some of these people now are in financial problems or have job relocation or different reasons to sell, but if they put 10-20% down, if their house is already down the same amount, they don't have money to close the transaction. So those are people trapped in their equity and they have no option but to either hold the property for next few years or rent it or take the losses and move on. Folks, the main thing to consider is Bank of Canada is focused on bringing inflation close to 2%. And it depends how they do their calculation. Housing or shelter cost is the big driver of inflation numbers. And housing remain a very key driver for the inflation, as you all know. But builders, if their cost increased, whether it's labor or construction, they tend to pass those costs to the buyers. Same if you are a tenant anywhere in Canada or Ontario, you are aware that if the mortgage cost goes up with the landlord and with the crazy low supply of good quality rentals, those costs will also increase and be passed on to you as a tenant. So we need more than 1/4 point rate cut to have a meaningful impact in our housing market. That's my personal opinion. There's a lot of folks, they think when the 1/4 point rate cut happen, it will open floodgates. I personally don't believe that's going to happen because there's a lot of different variables. Economy is still struggling, and I've been selling real estate for last 18 years all across Golden Horseshoe, Greater Toronto area. But what I have seen in 2021 was crazy. What I'm noticing right now is also very different what we have experienced in past low cycles. Another thing I like to highlight is people think 1/4 point, rate reduction on June 5th or in July, it will benefit buyers. But folks, 1/4 point rate cut is not going to qualify for a lot of buyers. If you're looking to get a mortgage at 7% qualification or 8% qualification, apart from impact on your psychology on the consumers, the purchasing power is still challenged. That is the reason lot of first time buyers, they have given up hope to buy in Vancouver, Toronto or in major cities, and are now going to different parts of Canada like Alberta, Manitoba, Nova Scotia. So people are still desiring single family homes, and my guess, calculated guess is, as soon as we have consistent rate cuts, first product which is gonna rise is single family home. Your detached home, semis, townhouses, condo, apartments, not so much. I don't think so. In next 2 years, I see price growth in condo market. We have lot of surplus supply. So if you are a tenant, you have a stable job, you have saved down payment, I think now is a great time to start your home buying process. You start searching neighborhoods, cities, call a good realtor who know what is doing, so you can make an informed decision. That is number one thing for people who are considering home ownership coming out of leasing. Second thing is, if you are a mortgage holder, I'm sure in last 2 years it was lot of rate hikes, which were never happened in last 40 years, and people are now treading with caution. So all mortgage holders, and they said substantial mortgage holders will be renewing at a higher rate in 2025, 2026. So obviously the rate cuts will coincide in such a way that by next 12 to 18 months, they will bring rates down to 3.5% for people to have less shock. Again, if you're a condo buyer in Toronto market, which has like 3 million people who live in Toronto, and suburbs of Toronto, which has close to 6 million people, you're looking to get into quality condo in good locations, I think next 12 to 18 months will give you lot of good opportunities to secure your condo unit, because right now the pre-construction market is struggling. Lot of builders are scrapping their high-rise condo projects in GTA because their cost per square feet has gone so much up that you can find better deals in the resale market. So if you're in a market to buy a condo anywhere in GTA, Golden Horseshoe, give me a call at 647-961-2639. I would love to help you in that. Lastly, guys, the advice in this channel is of generic nature. I don't know your personal financial situation. I don't know your goals and plans for short term or long term. So if you want a second opinion, you want a candid, honest take on your situation, don't be shy. Give me a call anytime, 647-961-2639 to discuss. At the end of the day, all I want to say is tread with caution. Rate cuts are on the way. There is a chance it will start in June, if not maybe July, but definitely by end of 2024. If you are renewing a mortgage, my tip is don't lock into 5-year term, because by end of this year or by end of 2025, rates will be substantially low. That I can guarantee you. Any other questions? Call me. And if you're a first time viewer coming to my channel, please subscribe, leave your comments, and tell me what do you think about upcoming rate cuts, how it will impact our Greater Toronto area market, South Western Ontario market. Thanks for watching. Talk to you soon.